But let's start with Volkswagen. If you look at the industry, I mentioned earlier about 50 million units a year. Volkswagen and Toyota are the world leaders. They both produce just under 10 million of those units a year. So we're talking about a really enormous producer. But of course, this is the one which had Dieselgate in the course of 2015. And you'll see in a minute what the share price looks like, because it took a big punch right to the face because of the loss of face, you could say, and concerns about having to pay in the form of buybacks as well as fines, and then the loss of status and concerns about future sales. But before we look at the chart, let's have a look at the market capitalization. That is priced in euros, but I've decided right here and now I'm not even going to distinguish between euros and dollars anymore because it's too hard. You know, it's like 1.06. So there you go, 63.14 billion euros or dollars, same thing, more or less. Price to earnings ratio is hard to put a pin in because, of course, it's dependent in part on prior periods, and then it's showing as a PE of 200, which sounds a bit laughable. Dividends haven't been coming very fast. Let's have a look and see at the graph. So you can see exactly there in 2015 is when that thing blows up and the share price basically falls from what was its all-time high? I think at about $250 to 100. Oh, my soul. And now?
That's all the fine and the as you said, the Dieselgate scandal coming through. And I mean, I think if you're looking for an investment case in the stock, is it going to be able to get through it? Is it going,
have they got their arms around what that's going to be?
Has that all become priced into the stock? Is all the bad news in? And from here, we're going to see it going a lot further. So I mean, if you look at obviously the earnings came under enormous pressure. That's why that PE popped up like that. You know, as you said, but I think the quantum of the fine is still, you know, the fine and the impact is still unknown. There's also talk that you know, in the Audi manufacturing as well, there's now a secondary court case that could be had.
So what concerns that even in Audi there might have been some?
Yeah, there is. I think they've already admitted to it. But the problem is the first optimization was around, I think it's oxides of nitrogen that are essentially, you know, create smog, which is, you know, very prevalent in California. So that was kind of what their defeat device was doing. The new code that they found is completely different from the original code that they were being fined on, and that actually defeats CO2 emissions. So, which is a greenhouse gas, which is far more, I suppose, you know, far more dangerous to humankind. So, and far more regulated in Europe as well. So, you know, there's still a lot of a cloud hanging over VW, but again, you can't discount it because, as you said, Toyota and VW are the biggest. But the first half of this year,
because the products remain enormously popular. I mean,
and
the
first
Polo,
first
like
half of this year,
seller.
it was the biggest seller of motor vehicles in the world. So,
and
it's
it doesn't
very
appear
difficult
that
to
current sales have been dented too much. Is that correct?
Yeah,
like in Europe,
it hasn't. I think
even in China.
In the US it has been impacted more I think than Europe. But the US is a much smaller market for VW. I mean, VWs, you know, really get sold in Europe. And again, looking at the company, it's interesting. I don't know if you're going to see a recovery, but I mean, this is also the company, if you think of who's the company that's spending the most on research and development internationally, out of all tech companies, out of everyone, it's VW. They're the highest R&D spend.
I noticed that they did
I think they
lay off a few staff. But it's like 30,000 out of 615,000 or something.
It's 30,000, and it's not exactly a layoff either. So what they're doing is they're just going to naturally let those positions empty, and
a couple of Germans give them an early
few
beer, some extra sausages, just leave,
exactly.
No worries.
But at the same time, the headline is 30,000 jobs lost, but at the same time they're starting the electric plant now,
which
is going to create 9,000.
I did see a Goldman Sachs note which suggested that they feel that it's kind of getting towards the point where you're going to be able to see what it's going to cost them to do the buybacks of the TDI units and what it's going to cost them in terms of fines. Because remember, it's a little bit like BP with their explosion in the Gulf of Mexico. Sooner or later, it's big billions, but sooner or later you begin to get a sense of this is the litigation risk, and then it starts to get priced in. And you've seen from the share chart that that's been factored down.
Absolutely.
But your concern is tending maybe towards not hot, just in case that there's some last minute surprises and we haven't further leg down.
Yeah, I think one of the things is with the amount of cash that's been taken out of the company in terms of fines and paybacks, I don't think they're going to be able to spend as much money as perhaps others on shifting to electric. I mean, it's a huge focus for the company because they're trying to repair their image, so that if they can really focus on getting electric vehicles onto the roads, they can say, look, we're really clean now, we don't emit anything, you know. So I think it you know, for me, there's a long road ahead of them still, and you know, I don't think there's any urgency to buy them at the moment, so I'd probably go not hot.
Okay, I think I'm going to go with you on that one. I think that's probably the safe and reliable thing to do, and the share chart tells you that the consensus view is still watch, wait and see, because that's a pretty sideways trending chart there, notwithstanding the all-time highs and the history. Right.